Before I get hate in the comments, I want people to understand that this was over a $1 trillion valuation that is currently sitting at $474 billion. Before we get into today's video, I have to give a massive shout out, and it is my fault. I've been busy planning the wedding and just getting caught up with what life has thrown at me. The amount of support that I recently have gotten is definitely overwhelming, and I just want to thank a lot of the subscribers on this channel that are active and just positive influences on what we're trying to create here. Stonecutter74, thank you so much. Adam Folksinski, thank you so much for the donation. I just got your message, and man, it definitely motivated me, so I want to thank you as well. Puzzle Data, can't thank you enough for the support. Patrick Reynolds, sorry for the late call out. Really appreciate everything. And Anthony Castro, the message you gave me today was the nicest message I've ever received since starting this channel. And thank you for your service. And I appreciate the donation. And I'm very grateful for all you that are donating, contributing, and just being positive on this channel. With that being said, let's get into today's video. So the question was, would I start buying Tesla at $100 a share? Now, if you guys have been following the channel, I've kind of been bearish on Tesla's valuation. Love the stock, love the car, felt like the valuation is overstretched, and we really do have kind of the bears and the bull case for Tesla. Either people really love the stock or think it's completely overvalued. And it's also a company that I've definitely been on the short side of buying puts and things of that nature, as I did think that the valuation would come down. As we're getting a contraction in valuations, and the more elevated these valuations are, the more they're going to fall in this type of market. And so I've been warning people about Tesla and the valuation contracting. But where the stock is today is now an opportunity to buy Tesla. What we're going to do is kind of just get an idea of what the chart's telling us, and then also take a look at the fundamentals and see if it's starting to get close to our wheelhouse as far as a buy. A couple things I want to point out about Tesla that's probably, maybe it is being talked about, maybe it's not, but it's kind of a silent killer when it comes to valuations on stocks. And that's going to be share dilution here, guys. Right down here, we can see it going from 2.7 billion shares outstanding to 2.88 to the trailing 12 month is at 3 billion, call it 3.1. But when we pull up the current quarterly report, we can see here that it is actually over 3.1. It's actually at 3.146 billion shares outstanding. It's definitely something we want to equate for when we're running our valuations on Tesla. A lot of things I like about what I'm seeing with Tesla, and there are minor concerns that I have. They are growing their cash position pretty strong, which is good to see, going from 17.5 billion in cash and cash equivalents to 19.5 billion in cash and cash equivalents. Along with that, short-term securities is growing as well. Did add some liabilities as well, roughly 3 billion, but overall balance sheet, in my opinion, is very, very good balance sheet overall. I think when we're talking about bulls and bears when it comes to Tesla, the one thing we all can kind of debate, and this is also how we arrive at a higher multiple for Tesla, is it more than a car company? And once again, guys, I'm really not picking one side or the other. I would say that it is a car company, but does have interesting dimensions that come with it. Therefore, I tend to think that it does deserve a little bit of a higher premium. You can see top line here, that is going to be automotive sales. Along with that, regulatory credits and automotive leasing. So all this is pretty much their automotive business, coming down to bottom line of 18.6, call it 18.7 billion on 21.5 billion of revenue. We have services and other, and then where we also talk about Tesla having other opportunities of revenue is going to be the energy side of their business, which has had a nice little pop here. When we look at stock forecast for Tesla on stock analysis, we can see here we got a price target of $24.58. Not so sure we're going to see those levels, but who knows. And as high as $457. Once again, don't think we're going to see that in the near future, especially when we think about the economic backdrop and the fact that the EV space is getting competitive. There are a lot more options now as far as EVs go, and there will be more in the future. Go to tip ranks, we also get a pretty substantial differences in analysis expectations here. Everything from an $85 price target all the way up to a $436 with an average price target of $288. This is implying a substantial upside, almost 100% upside in Tesla. Taking a look at some hedge fund activity here, we can see that with the recent drawdown in Tesla, there has been some new positions taken and some added positions, very little reduction overall. The hardest part, I think, with Tesla is really factoring in what their true growth rate's going to be. I can see anything from 20% all the way up to 40%. I can make a case for either or, and this is where it gets really, really difficult for Tesla. On stock analysis, we can see pretty much 20% growth rate over the next few years. But then once we go to Yahoo, they're expecting almost 50% growth rate for the next 5 years. To me, guys, this is very, very high risk to be using these type of growth rates in what we consider an economic backdrop that's really not supportive of growth right now. And we can factor in that we could be in a possible recession in 2023. I'm just not so sure that the six-figure EV car space is going to be as strong as these analysts are expecting it to be. Now, this is me personally, guys. This is me building some safety here. I'm trying to figure out what I think is a pretty fair growth rate to use over the next 4 to 5 years. I'm going to use 22% growth rates, which is pretty much cutting analyst expectations down about 30%. I know that's a substantial haircut, but I tend to think that we're going to be in some tough waters here, and I also think that the EV space is getting competitive and that there's some interesting vehicles out on the market that's going to give Tesla a run for their money. I could be wrong here, but this is just me running my numbers. Always run your own, and this is not financial advice, obviously. From that point on, I'll have them growing roughly 11%. And then from years 6 through 10, I'll have them growing roughly 7%. Now, here is the question, ladies and gentlemen. What kind of multiple are we going to put on a company like Tesla? And had a trailing PE just last year of 400 versus 46, guys. So valuation has been completely chopped down here. And this is where I think it gets interesting for a company like Tesla that I think is a good company. Now the question becomes, now that valuations are coming down and things are starting to make sense from value investing standpoints, is this company getting closer to a buy? And it's an absolute yes. This company is absolutely getting closer to a buy. What kind of price target we're putting on it is the whole story here. And I could definitely see a case for almost any sort of valuation on this company. So it gets very, very difficult. Now, when we're looking at forward PE and a trailing 12-month PE, we can obviously see that Tesla is going to trade for a pretty substantial premium here. I also have to factor in that the growth rate of Tesla has been unbelievable. Most likely going to catch up to the sector median valuations as their growth rate is well above what industry standard is. When we look at an industry standard, it's growing roughly 12%, and Tesla is over 4xing the growth rate of the industry standard. So we can see why you're paying a premium, and it's only going to be a matter of time, in my opinion, especially if they can keep strong growth rates through what we consider a contraction period of an economic cycle and possibly a recession. If they can keep strong growth rates through that, guys. Yes, while this valuation still seems significantly high right now, I tend to think that is probably closer to fair value if they can maintain a substantially strong growth rate. And so that's why I'm using roughly a 10 to 15% above industry standard growth rate for my projections. That's why I'm getting roughly a 22% growth rate. As you can see here, industry sector median is sitting at about 11. So I am doubling the sector median growth rate over the next few years, which I think is fairly reasonable for a company like Tesla. So does it make sense that the valuation of this company is trading roughly 4 times the valuation of its peers? And I can make a case in either or direction, but I would say yes, I think it does make sense as it is outpacing the competition. This is really where the art of investing takes place, because you can really make a case, you can really make a bull and bear case for Tesla, especially at these levels now. I think before, when it was trading at $300 and $400, I really had a hard time getting a bear case. I really had a hard time giving a bull case for Tesla. But since the recent drawdown, going from over a $1 trillion valuation down to a $400 billion valuation, I can start seeing some reason to why this would be a buy at these levels. So from an EV to EBITDA, I'm going to use a 20 to 25 EV to EBITDA, which is a little over double the valuation that you're getting with sector median. And the reason why I'm doing that is because I still think they're going to maintain a substantial growth rate over their peers. So I do think that a premium today to have outpacing growth in the future makes sense. Now, I want people to understand I'm getting roughly a $96 price target for Tesla here. I'm undershooting a few different things. I'm essentially building safety here. And I can understand paying a 25 EV to EBITDA for Tesla, as it's historically traded for much higher than that. which gives me about a $110 price target. Guys, for me personally, I really start getting, Tesla's definitely starting to get interesting at these levels. Now, I'm running my growth rates at 22% for the next 3 years, but if you guys think that they can grow right around 30%, I'll put that up just so you guys can take a look at what that looks like. And you get a $116 price target. Now, I want people to understand that I am running my growth rates very, very conservatively here, as I do think there's going to be some tough times ahead, and I think that Tesla's going to end up hitting a wall in the next few years that's going to slow down their growth rate, and it's going to contract their multiple. So I'm getting prepared for that. That is the analysis that I'm personally seeing. You don't have to agree with that, but that's in the analysis that I'm personally seeing. So to answer the question of is Tesla a buy around $100, if you think they're going to be growing over 22%, I absolutely think Tesla could be a phenomenal buy at that price target. So as always, guys, really appreciate your time. Thank you so much for spending it with me. Just want to thank everybody who's been active and positive on this channel in an unbiased format. Now, I'm not always going to be right. Most of the time, I'm probably going to be wrong, but at least you will see how I arrive at certain price targets here. I'm not just pulling numbers from thin air. I'm really trying to be logical in my thought process, and that's how I arrived at this price target. If you're following people that don't arrive at specific price targets or don't have an idea what they should be paying, you might want to kind of just take a step back and not take what they're saying, and really take what they're saying with a grain of salt. As always, guys, appreciate your time. Thank you so much for spending it with me, and we will see you in the next one. Peace.